Hey guys, welcome back to another episode. Today we're going to take a closer look at OnSemiconductor, a company that focuses in a lot of growth market opportunities like automotive solutions and silicon carbide, things like EV, but the stock is trading at a PE ratio of 13.85. On today's episode, what I want to do is the following. First, take a closer look at some of the bullish cases, or actually bearish cases for OnSemiconductor. Then we're going to jump onto some of the bullish cases, and we're going to end up the episode with some financials and some valuations as well. So let's take a closer look in today's episode. So right now we can see year to date on semiconductor is up roughly 12%, 12%. And this is pretty interesting because you guys know me, I follow the semiconductor space and most semiconductor companies are killing it. I want to say the average is probably up over 40%. So we can see on semiconductor is underperforming this space. And now if we take a closer look at on semi from its kind of year to date high, the stock is down roughly 36%. So, in my opinion, this is one where we have to keep a closer eye on and let's try to understand what's happening with the stock.
I want to thank the Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
So the company recently shared their quarter 3 2023 earnings, and there we did hear a lot of kind of bearish cases for the overall stock. Now you're going to have to let me know in the comments, do you believe a lot of the bearish points that we're seeing here for OnSemi, are they short-term or long-term? In my opinion, I do believe a lot of them are short-term based. So that's why I do believe there might be a buying opportunity here. But again, we'll take a closer look at some of the bullish cases in a bit. So the bearish case number one, the company did mention that they are seeing softness in the European market due to high interest rates impacting demand. And the European market is definitely a very big market for the automotive space because you have a lot of tier one customers in Europe. For example, Volkswagen, BMW are some to name right now. And they do mention that a majority of this slowdown is due to the impact of high interest rates. So the macroeconomics, this is kind of a rinse and repeat topic that we keep hearing all around the map in different types of stocks. I recently just did a C-scaler episode, and obviously that's one of the impacts at the moment. So obviously that's causing a slowdown in automotive demand, which obviously kind of creates a slowdown in the supply chain and some of the products that On Semiconductor provides. So this is something that we have to kind of keep an eye out, and things can obviously get a lot worse before they get better. So something investors should keep note of. Now, bearish case number two, and this kind of goes on with bearish case number one, right? You're kind of seeing that slowdown in some of the automotive tier one players. And because of things like that, the company does expect lower expectations for their silicon carbide revenue. And this is probably one of the most notable points in their silicon carbide segment in the most recent earnings. The original target for 2023 was roughly $1 billion. They kind of reduced that by a whopping 20% to roughly a little bit over 800 million by the end of the year. Like I mentioned, most of this slowdown is happening because of bearish case number one, as major automotive OEMs kind of slowed down some of their investments. Obviously, silicon carbide is a critical segment for OnSemi, so this is something that investors should keep in mind now. But again, I do believe this kind of goes back with short-term pain. Once we kind of see macroeconomics kind of pick back up, we're going to see kind of high interest rates decrease, maybe an increased demand in auto industry, and that's going to trickle down to an increase in silicon carbide revenue. So now, bearish case number three. The company did mention that there are some operational challenges and margin pressures. And this is from the CFO. He did mention that they are seeing some operational challenges in one of their manufacturing facilities, East Fishkill to be exact. And also because the company is trying to control inventory at the moment, they are lowering the overall factory utilization rate. And kind of just like in any segment, right? When you have manufacturing and you lower the utilization rate, it does kind of reduce margins on there, because while those steps are proactive, lower factory utilizations often translate to lower production efficiency and higher per unit cost. So again, all of this in my opinion trickles down to kind of that number one bearish case. But when bearish case number one kind of goes the other way, we are going to see some growth in bearish case number two and growth here in bearish case number three. Now, bearish case number four, the company, as we continue here, it's all this trend of the macro environment. Because of macro environment, the company is unable to kind of give guidance for 2024 at the moment. And this is obviously kind of creating some unease and some negative sentiment to investors. I do believe this is another reason why investors are a little bit worried. We keep hearing from a lot of companies out there in the automobile space that, hey, look, 2024 with these high interest rates could be a very bad year. And by the company not sharing much guidance for the upcoming year, regardless, they are just finished quarter three, so normally they don't share full guidance until quarter four. They didn't really share much to kind of ease investors negative thoughts at the moment. So I do believe kind of just the outlook, the long-term outlook, and not providing much information there is creating a lot of negative sentiment on the stock. Now, if we take a closer look, bearish case number five, and again, this is going to trickle down to bearish case number one, but the company did a reduction in automobile revenue projections. And here we can see, right, quarter one, we can see revenue in the past few quarters. Quarter three was roughly 2.2 billion. Now they did guide for roughly 1.95 to 2.05 billion in quarter four of 2023. So we are seeing sequential decline here. And obviously, a big portion of this company's total revenue is the automotive and the industrial market. Again, this all kind of trickles down from that bearish case number one. That's why I use that for my point number one, because most of the other bearish cases, once that turns around, we are going to see maybe an improvement in all those other points. Now, I want to take a closer look at some of the bullish cases, but first, I do want to say thank you for the support. We're trying to hit 30,000 subs here at the at Jose Najarro Stocks. So if you haven't, make sure to hit the thumbs up and the subscribe button. I do have a membership program with exclusive weekly videos. Click join to learn more. Special offer at fool.com/Jose and other special posts and the pinned comment. So make sure to check that out. Now I want to take a closer look at kind of their growth opportunities. And let's start off with bullish case number one. And first is just the company's overall strong performance in the silicon carbide market. And we know silicon carbide is amazing for EV and for other segments as well, like power management, the industrial grid, the industrial market, even in data centers and high performance computing, thanks to AI workloads being so high demanding that actually increases temperatures dramatically. So the company does mention that, hey, look, they're expected to capture more than 25% of market share of the silicon carbide market by the end of 2023. And they continue their expansion in silicon carbide fabs. For example, one that they're manufacturing over 1 million 200 millimeter silicon carbide wafers per year. So this is definitely positioning OnSemiconductor to be a huge player here in the silicon space. And they do things like supply the wafers. They also do things like die and packaging. And they believe that they are the most optimal solution on the planet for this space at the moment. They also believe that by 2027, they will have roughly 35 to 40% of market share. So OnSemiconductor is definitely pushing themselves here to be a silicon carbide leader. Now, bullish case number two. They do mention that the company has a nice amount of long-term supply agreements, and obviously this can help with having more predictable revenue stream. They do mention that they have roughly 4 of the top 5 China EV customers. One of those kind of technologies was with NIO for the 1200 volts elite silicon carbide technology. So again, long-term supply agreements are helpful because it kind of helps provide more of a good visibility of where revenue will be in the upcoming quarters. Next, for bullish case number three, is just the overall growth in the automotive and industrial segment. The company did report quarter three record revenue in both automotive and industrial markets, and OnSemiconductor believes that this is going to continue to grow. They believe between 2022 to 2027, the compounded annual growth rate for the auto will be roughly 19, and for the industrial will be roughly 10%, thanks to things like electrification, ADAS, and power management for the automotive market, and for industrial, things like energy infrastructure, factory automation, and EV charging. So we definitely see a lot of growth opportunities here. Now, if we take a closer look at bullish case number four, the company is also kind of expanding into maybe some other markets. For example, they do mention that they did see some adoption in solar and energy storage solution, which bodes well. They also did see some growth in medical segments, particularly in glucose monitoring and hearing aids. So obviously, this can provide a nice amount of diversified revenue and strong revenue growth. Outside of that, the company is also innovating in image sensing technology, which usually have higher average selling price. So obviously, that bodes well. So that diversification outside of just pure your typical products in the automotive market, they do have some growth solutions in other spaces as well. Now, bullish case number 5, the company does have a nice balance sheet, so overall robust financial position. We are going to take a closer look at that. And while right now the company does have some impact on kind of the fab plants, they do have some nice initiatives that in the future, for example, their fab right strategy, they will improve the margins of their fabrication of silicon carbide. So obviously that's going to help out in the long term with things like margin improvements and obviously cost savings. So now if we take a closer look at financials, the company has roughly 2.6 billion in cash and short-term investments, roughly 3.4 billion in total long-term debt, but they do have roughly 2.1 billion in cash from operations in trailing 12 months. So financially, I wouldn't be worried about onsemi. The company right now has that negative sentiment that, hey, look, right now they're not growing as fast, but I do believe a lot of this is short term pain, in my opinion. Now, if we take a closer look at revenue estimates, the company for 2 fiscal years from now is expected to grow the revenue at roughly 10% from where it's at right now. I do believe the market and analysts might be underestimating it. And for me, that's actually making this even more of an opportunity for me. I do believe this company can grow a lot faster from what analysts are expecting next year and the year after that. And for me, that's why I do believe investors should keep a closer eye. Now, PE ratio is expected to grow a little bit from where it's at right now, but PE ratio for 1 year is 14.43. In my opinion, that's not crazy for a company with a nice balance sheet, positive cash flow from operations, plenty of cash, numerous growth opportunities. So on Semiconductor, while it does have numerous short-term pains, in my opinion, I do believe a lot of the growth opportunities kind of outweigh that. But let me know in the comments below, do you think I'm wrong here with on Semiconductor, or does it actually look pretty attractive? So take care, have a good day, and see you next time.